Today, we'll review what two institutional analysts are saying about Tesla stock. Shockingly, they're both quite optimistic, especially for the second half of this year. First, we have George Gianarikas of Canaccord Genuity, who's reiterating a buy rating and a $234 price target. Despite lower delivery expectations of $420,000 for Q1 and even expectations of further vehicle price cuts, Canaccord still sees margins improving later in 2024 as Cybertruck ramps and FSD take rates improve. Second, we have Adam Jonas of Morgan Stanley, who's predicting that the stock price increases well ahead of the launch of new products from Tesla. We have Brian White joining us. Brian has his own YouTube channel called FutureAza. Thank you so much for joining me, Brian.
Good morning, Herbert. I tell you, these analysts are amazing in their, not just their analysis, but the fact that someone will pay them to do them. It's really breathtaking.
I know you always say the same thing. You do have a sharp eye about these guys, which is warranted. So let's take a look at the Canaccord Genuity's George Gianarikas, what he's saying, reiterating his price target of $234 and a buy rating. Okay, so he's one of the few that has not cut his estimates, but he does recognize that things are negative, the sentiment's negative, and there's a lowered volume expectations, lowered margins, and then we'll see what he says, why he still maintains his price target. So he says here, overall, we view much of the negativity currently surrounding Tesla as extreme. So he thinks that the negative is more than it warrants. And the recent uptick in volume of negative and bearish feedback we have received regarding Tesla stock, this does serve as a barometer as to how lopsided current sentiment is. Yes, the company is between two major growth curves. Yes, earnings revisions have been nasty for some time. Our January post-deliveries note discusses the multiple expansion in 2023 in the face of margin shortfalls, raises several pointed questions about the years ahead, and previews the coming growth slowdown. Let me pause there before we get there, but I think that he's looking at a 2-year outlook, and he's recognizing that there's going to be issues. What's your thinking about the negative sentiment?
Absolutely. It is undeniable that the sentiment is extreme when it comes to Tesla. There was a time when Tesla was everybody's, poster child. It was the super hype company. And then when the tide turned, maybe 2-3 years ago, it turned hard. And, you've seen my media bias tracker, and the headlines are unfair. Any good news can be spun as bad news. There was, people will go out and prove that, it is in fact, bulletproof up to the caliber that they showed, but it's not a bulletproof against cannons. You're really missing the point here. And they're doing it on purpose, and they're doing it for clicks because it's easy to hate on Tesla. So I would agree entirely that the sentiment is unduly bearish. And yes, they are, like you said, they are between two growth waves, and there's opportunities coming up ahead, and downward revisions in profit and earnings are not a big surprise when you are between growth waves, when the entire market is correcting. But there are a lot of upsides that I don't think are fairly covered in analyses like this. Maybe they did factor them in, things like falling cost of goods sold, which makes the cars cheaper to build. There was margin improvement over what was expected last quarter because the cost of goods sold improved. And so, well, how? I mean, they're already as efficient as they can be. Yes, I mean, maybe they're always getting more efficient. That's the name of the game. And the part suppliers are back up to speed. And especially when it comes to things like batteries, the competition was expected to be sucking up all the battery supply, and a whole lot of them have been stepping back from those ambitions, while the others who have stepped in to fill the gap are largely Chinese brands who don't use a lot of the same minerals that go into these into the batteries, because they use lithium iron phosphate, which doesn't have a lot of the manganese or the cobalt or the nickel that you would see in a NMC battery, which is what Tesla mostly uses.
Yeah, negative sentiment, very bad. And it's continuing to snowball, it seems. And then we'll talk later about how FSD, Tesla's full self-driving, seems to me, in my mind, going to put a floor in how much the stock could fall. Next week on Tuesday, they're going to release their production delivery numbers for first quarter. We're expecting that to be low. I'd like to hear your estimates, what you think it is. So back to George, what he's saying here that, okay, he said, however, right, The issues of first quarter appear to be somewhat demand related, but mostly supply related. Okay, so he thinks that the sentiment is really thinking that the demand has fallen. He thinks it's mostly supply related. That means people may be mostly misdiagnosing current Tesla fundamentals. We estimate supply constraints may have cost Tesla about 95,000 units in deliveries. Also, with pricing in a better place, at least for now, could margins help set the stage for positive earning revisions over the course of 2024 as Cybertruck ramps? Um, I still am with him in my kind of calculations and thoughts that margins are going to improve, like you were saying, with cost of goods falling. I think that they may actually do cut prices though, and so for that, if they do cut prices just to move volume, then that's going to be the maybe the margins won't improve, but they'll still hit their sales numbers. But yeah, what's your thoughts on what he's saying here? Is it supply related? Is it demand related? Tell me how you think he came up with the 95,000 units, and what do you
Yeah.
see in the market?
This feels like he asked ChatGPT to do his homework. Put it if you put it back up for me, I'll address
Yeah.
it there. The 95,000. Now we've got some slowdowns. There was the shipping issue that affected Berlin for a little bit. There was the power outage at Berlin that affected it a little bit. But those are the only supply constraints I'm aware of. The Cybertruck has enough batteries. It has enough. There, we haven't heard of any part shortages there. We haven't heard of any part shortages in Fremont and in China, where we know that there has been. We have credible reason to believe there has been a cutback in the number of hours being given out per week. I have no idea where that 95,000 number comes from. That's a quarter of the quarter. I don't see how you get to that math. And if you'd pop it back up for me again real quick. There was another point on that. Let's see. We estimate and with pricing in a better place, at least for now, could margins help set the stage for positive earnings revisions? We'll see. So the Cybertruck being sold at 100,000. Now I brought an engineer or two with me to the event, to the tour of the factory, and one of the questions I asked them at lunch that day was, what is the real cost of the Cybertruck? And this is something I've asked a number of my sources, people that I've talked to about other topics as well. And I've said, look, I'm just trying to figure out what is the actual cost of the Cybertruck today. They're not running at capacity. There are early production inefficiencies. There are a lot of parts that haven't yet gotten cheaper with volume because the volume is still comparably little. And the number we came up with is 80 grand. We believe that there is a 25% margin on these early Foundation Series Cybertrucks and even more on the Cyber Beast because adding a third motor does not cost $20,000. So every Cybertruck sold. Now, if you're doing 100 Cybertrucks a day, 20 grand times 100, that's $2 million a day in extra profit that we didn't have last quarter just from the Cybertruck. So while they are acknowledging some of these other issues, and to say it's demand constrained, maybe just because interest rates are high, I guess. But this whole slide to me felt a little random. It felt lazy. It felt a little disconnected. And yes, I do give these analysts a hard time for doing what I consider to be work that misses a lot of the big points. To their credit, they're covering an entire industry or multiple industries. They're supposed to be analyzing dozens of companies, and you can't have the kind of insights that we do when we only cover one really thoroughly and some others less thoroughly.
Right. Now, we are 3 days away from the quarter ending, first quarter ending, January, February, March, and then they're going to report it on Tuesday. So I'm curious what your numbers are. Here's what he says about that, right? So it is demand related, right? We do agree that there is slowing, lower numbers than what was expected. So these guys are adjusting their first quarter delivery estimates, the January, because from 4041 to 420. So they're still saying that their estimates are 420. Actual investor expectation for a quarter are always tough to decipher, but we hear first quarter delivery murmurings in the low 400,000. So we have been hearing that. We're also adjusting our volumes from 2.08 million to 2.04 for 2024, but they're still above the 2 million. Our 2024 non-GAAP EPS estimate is also moving lower, mostly due to an increase in our tax rate and OPEX adjustments to 360. Our price target of 234, based on 26 times our 2026 earnings, non-GAAP earnings per share remains the same, as we are not adjusting our 2026 estimates. So they are projecting out, when they say 2022 to 34, it's 2 years to 2026. Even maybe longer than that, actually. So yeah, they're shooting for 2.04, and they'll say 420. What's your numbers?
So my numbers, like everyone's, are lower. I started the quarter quite a bit higher, probably in the 460 range, but the first Berlin shutdown, the second Berlin shutdown, there's only so much additional efficiency you can squeak out of Fremont. Texas appears to still be steady and ramping, but not enough to offset the hours that were cut in China and the weeks that were lost in Berlin. As of a few days ago, when I ran it last, I was at about 431,000, so a little higher than most of the people out there, but lower than previous quarter. So yeah, my numbers are also a little lower.
Yeah, and what happened in China, and why do you think that that's happening?
So I haven't been able to independently confirm, but the accepted belief was that they had gone from what was it, 7 shifts a week or 7 days of production a week to 5.5. 5.5 is actually what it was. So they cut a day and a half of production out of the week, but they only did that in the second half of the last month of the quarter. But there had already been an appearance of some softening of production before that. It was easily attributable to the change in when Lunar New Year happened. But then as the trends became longer and you got more data points, it appeared that it was already not off to be the best quarter that they had had, which is unusual for Shanghai. They usually just grow. Worth remembering, Q1 is the weakest quarter for car sales industry wide. And that's because for whatever reason, people aren't buying cars in Q1. There's the holiday hangover still going on. Summer is the big time. And if you look back at Tesla's sales charts, if you look back at everyone's, you'll see a Q1 dip is not unexpected. So to me, a more important figure would be year over year, same quarter sales and production and deliveries. And that's what I would be looking at. Their notion that things are going to remain, that the whole year is going to be basically flat, to me is ridiculous. Unless Berlin keeps getting shut down for a third of their quarter every quarter for the rest of the year, the numbers we're seeing right now are meaningless. Unless Shanghai doesn't resume its gangbuster pace, which I don't see how they couldn't. They've got more markets to export to. Those numbers are going to improve. Fremont will remain steady, and Texas will only be increasing output. There's no reason they would need to sell fewer Ys, especially if, like you said, they can reduce the price a little bit. Even a small price cut would have some impact. And then they're going to have ever increasing Cybertruck deliveries. And the big thing I think the analysts are going to miss this quarter is just how many Cybertrucks are sold. But I also think that just like last quarter, they're not going to give us the number. They're going to lump S, X, and other into one giant bucket, which will tell us nothing about semi deliveries or Cybertruck deliveries.
Mm-hmm.
And I think if we look at S and X sales for this quarter, I imagine they're down because those are flagship products and Tesla's got a new flagship.
So what's your estimate for the end of the year, the whole year? Are you still above 2 million?
Oh, absolutely. Absolutely.
Okay. Yeah, my sense is that they're going to continue to build as many as they can at the capacity that they can. Jeff Lutz says 85% of the capacity of each of these factories. That's what they're going to do. And then what they'll have to do is just cut prices to move. If there's softening in demand in China because of the economy, if there is softening in the economy in Europe, they'll need to just cut prices. And but the question is whether or not the margin, the cost, because we will see cost of goods go down over the course of the year. I still believe that there's going to be improving margins, but it just depends on, do they need to cut more to be able to get that, or is it going to be balanced out? Yeah.
And all of those are completely valid points. There's just too much opportunity. If we're trying to look all the way out to the end of the year, it's going to be very hard to predict. Mm-hmm. If interest rates improve at all during that time, we're going to see a big jump. If you look at what BYD's approach is, they've got some new numbers out all their numbers are settled for the last year. So what they're looking at is they have been cutting prices aggressively. And if you look, their profit is not going through the roof. Their market share is expanding instead. And if Elon comes to me, as he does, and says, look, Brian, I need to, obviously that's not going to happen. But if they come to you or me and say, which should we do? Sell fewer units and keep the margin where Wall Street wants it? Or should we just get units on the road? We're still going to be positive. We're still going to have industry leading margins, just not absurd margins. We're no longer looking at Apple margins. We're looking at, healthy, good margins. The answer to me would be clear. Please do cut it another $500 at a shot, $1,000 at a shot. If, as long as we're still margin positive, let's grow that market, because unlike BYD, unlike Ford and GM and all the others, Tesla has amazing opportunity, amazing revenue potential that can take place outside of the sale. They can, and we're looking at this big FSD trial coming up. They wouldn't push it if they didn't think it was going to work. And I think it's going to work. I think this is a butts in seats moment. Just like how the best way you can sell a Tesla is to get someone behind the wheel, preferably with a tour guide. Someone like you or me who can say, okay, now do this, now do this. Now you understand it. The tutorial at the beginning of the video game. And with FSD Beta version 12, from what limited experience I have, it is good enough that there will be a conversion rate. And if we're talking just 1 million cars in the US, just 1% take rate, that's $2 million a month in new revenue. For every 1%
Margin.
that's 2 million in extra margin.
Yeah.
You're telling me that's not going to hit the bottom line? And if V12 is pushed out, the earnings per share this quarter could bump a little, because you have to recognize a little bit more of that deferred revenue. So it's going to be, there's a lot of headroom that has been overlooked.
Yeah, we're obviously talking about production deliveries. We're estimates of how many cars are sold this quarter and this year, because it's coming up next week. But reality is, you and I totally agree that people have been looking at the trees instead of the forest. Here we have full self-driving coming to fruition. People are very, very excited about it. I've tested it. You've been testing it. Everybody's now able to test 12.3, but the rate of progress is so fast. I've done a couple of shows on this. And so now, like, these margins are going to go through the roof. They're going to be better than, what we're seeing now. So cut the prices, increase the margins. Now you got the other additional margin additive is the FSD. So even the analyst. So here's, George Gianarikas of Canaccord. He says this: after they wrote it, this is a postscript. As we were working on this note, Elon Musk instructed Tesla employees to both install and demo FSD beta for customers taking delivery in North America. Tesla will also offer 1 month of free FSD to all U.S. Teslas starting this week. We've been strong advocates of Tesla's razor and razor blade approach, and they're one of those analysts who was very bullish on FSD, and now it's paying off, in seeding the market with vehicles that are software upgradable with a high margin software, and see this as a potential catalyst for future penetration gains. However, we see additional price cuts as necessary for material change in FSD penetration. So this is something I believe in as well, right? Which is, okay, we see the softening. Now he goes, I think it's mostly supply versus demand. We're lowering our margins expectations. We're lowering our vehicle expectations, but FSD is here and it's going to add to it. So this is a big deal as far as I'm concerned, yeah.
There's a theory I've heard that these analysts like to game their estimates so that they can squeak out a little bit of extra profit. It is entirely possible that at these low prices, they've been scooping up shares, which they're looking forward to dumping for short-term gains next week when we see the numbers. And the best way to get a short-term pop is to shoot low, knowing that it's going to be higher. It's a bit unethical of a tactic. We used to see Gordon Johnson would always say, oh, Tesla's going to miss their numbers. They're going to miss. And well, what are their numbers? And he'd say, they're here. and he'd have the highest number on the street,
Yeah.
and then he would accidentally be correct. But he would still say, well, I mean, but they missed. They still missed because my number was still even higher than that. It's like, buddy, if that's your real number, you should be the most bullish of them all. But he's definitely got some kind of bull going on there, but I think it's the other.
Good one, Brian. Good one. Okay,
Yeah.
so that's George Gianrikas of Canaccord. He's been very bullish. Love that he's always been thinking about FSD. Here's Morgan Stanley. Morgan Stanley has also been now been cutting estimates. They've been very, they're kind of like less bullish. But it's interesting when you read their notes. They're very bullish on their notes, but they're very pessimistic on their actual targets. And that's the way analysts work, right? They want to keep their numbers low, their price targets low, and then they're still believers in the story. So here's the latest note that they wrote, and they said this: we know it's very hard to imagine today, but we eventually expect to potentially see a load of new products coming out of Tesla, and expect the stock to eventually price this in well ahead of their respective launches. I think that's a very critical part of the sentence, that the stock will eventually price this in well ahead of their respective launches. We estimate Tesla's current model lineup leaves over 80% of the US market, segment and volume weighted, completely unaddressed. We look forward to an eventful second half of 24. So this is in between two growth waves, the reason why slowing down. But when the Cybertruck and when the compact car comes, it's going to address the 80% of the US market. It's going to be a massive win for Tesla. But the key part is that when is the stock going to react? And they agreed that, stock market is forward looking. And so stock will rise ahead of that. What's your thinking about this? The expectations of when the actual volume of these compact car and the Cybertruck will take at least a year and a half, maybe in 2 years away from now before it actually hits the bottom line, makes a material presence. But it almost like it's just more about just knowing it's coming, then people start, pricing it ahead, right? What's your thoughts?
So I'm thinking this reads like it was written by the best analyst on the market over the age of 70 or maybe in the 90s, because it's only looking at cars, and that's the wrong approach. If
Exactly.
all you're talking about is auto production, auto sales, auto margins, the stock is already much too high. Their price targets, and you'll notice that sometimes they'll say, oh, by the way, we've lowered our price target, but changed it to a buy rating. These guys are throwing dartboards. No matter what today's stock price is, they're going to shoot just over it or just under it and say that's where it should be. Very few have the courage to say, no, it should be 1,600 or 100. And you will see people saying it should be 0. Those aren't honest people either. Saying that it's not addressing 80% of the market. I would love to see that pie chart, my friend, because I know they're not in minivans, and I guess they're not in I don't know what segments other than compact and minivan that they're not addressing in some way. You could argue that the Model X doesn't fit the same need as an Escalade, and that's true, but the Escalade is a very small market. You could argue that the Model Y as a crossover doesn't address maybe some off-road uses. I don't think that's a big market. So 80%, do they not have enough station wagons? What is missing from the lineup? I guess you could say delivery vans, but I think they were talking about passenger vehicles, not commercial vehicles. So because if we're talking commercial vehicles, the whole market is still wide open, really. So I don't know where they're coming from on any of this stuff. It sounds good until you step back and say, what? Wait a minute. If you were to try and fact check it, you would be hard pressed to make your numbers match theirs.
Yeah. Well, I mean, it's still important for us to follow institutional investors. They're like a big chunk of the money that's going to flow in and what's going to move the stock or not. And so I'm always very curious to see, when do the institutional investors like clue in and they start talking about Tesla, not just a car company, but an energy company.
And I
When do
agree
they?
completely. Yeah, it's like the way Elon is always saying, don't listen to mainstream media. Ignore them.
Yeah.
If mainstream media dies, everything dies with it. All of the stories that analyze the mainstream media die too. And those of us on X who are posting regularly cannot fill that gap. We do not have the resources necessary to do it. And the same thing, we can analyze what they're doing to tell you why it's right and why it's wrong.
Yeah, it's a collective effort to try to frame what is Tesla. And so at least to give Morgan Stanley and Adam Jonas credit, they came out pretty strong, and they influence the other institutional. They're one of the leaders, right? Whatever they say, eventually the others start copying. So they start talking about Tesla as an AI company, and that's the thing that they're really uh, bullish on. You've seen that ARK Invest, disruptive technology, their stock has not done very well, or their fund, but they started buying big time, like every day, $35 million worth of, or a million shares of Tesla. They're really, they're really going hard on this. And again, it's one of those things, right? You look stupid until all of a sudden you don't look stupid, because FSD, is now appearing like it's coming. Not that it's robotaxi, but it's enough to actually tell the story that Tesla is no longer an AI, no longer just a car company. That Tesla with FSD together can completely, demand problems, car volumes and pricing margins. It's all going to be upended, disrupted. Even if you don't have robotaxi, I think that's the part that people need to like just think through, follow through what the different probabilities are. Even if we never get to robotaxi, it takes 5 years because of regulations, because of all these March of Nines. What does it mean when you get into a car that has these added features, right? Much more comfortable to drive in, even if it's supervised driving, but you're less supervising. You're really just relaxed a bit. Even now, when you have autopilot on a highway, it's so much. I cannot not, when I drive from Seattle to Vancouver, 2.5 hour drive, I need autopilot because I just find, even though I'm still very much aware, but I don't need to like be that aware about the car, that the car in front of me might stop automatically. I'm just a little bit more relaxed. I don't have my foot on, always like trying to figure out, should I be, braking, be in front of the, anyways. Imagine if
It
that's the
takes up
case.
it
Yeah.
lightens up so much headspace. These long drives become half as long. A
Yeah.
12-hour drive feels like 6, a 6-hour drive
Yeah.
feels like 3. Supervised FSD, even just autopilot, is so much easier. But FSD is that much easier because it can do your lane changes and get around the big trucks and all that. It is not well understood outside of Tesla
Yeah.
owners, because how could it be?
And then if they add in the safety, Volvo did a fantastic job of marketing themselves as safe, the safest cars in the world. My wife decided, told me we need to buy a Volvo as soon as we had our first child. And it's like, what? We're going to buy a Volvo? Yeah, it has to be a Volvo. Shouldn't we get a minivan? No, it's got to be a Volvo. And it was like,
Right?
they did a fantastic job of marketing it that way. And so, Tesla is going to just completely differentiate themselves if the car has so many features where it eliminates or reduces drastically the chance of getting into an accident. What does that mean for a car?
What Yeah, what I would like to see is, let's go back 20 years, take the best rated car of the year or any of the 5-star cars, since they don't break it down by best. Take a 5-star car from 20 years ago and run it on today's tests. And I think what you're going to find is it's
Yeah.
a 3-star car, because the tests have gotten that much harder. And when we're looking at, a lot of people, a lot of critics like to say Tesla's doing this little thing wrong or this little thing wrong. In the early days, it was the panel gaps. Oh man, I would never buy one unless they fix that. Well, they fixed it, and now you've bought one. And I was telling them then, if they get this one little thing ironed out, if that's the only complaint remaining, they're going to steamroll the competition, and they have. So if you look at their factories and say, they're doing this wrong or this wrong or this wrong, they know, and they're working on it, and they're going to fix it, and it's going to get better. And we're already seeing that Tesla has the capacity to sell a car for less than the competition can build a car in EVs. And that gap is only getting wider. And if you are the competition, you best be sweating.
Well, so tell me if I'm wrong here, but I've got a theory about how big of a disruptive change this is. So when you had these wireless phones, the little flip phones, the little wireless phones from Nokia and the BlackBerry, right? And then Apple comes out with this smartphone, and it's just a phone, still a phone, but it completely disrupted the market, right? Nobody would just automatically just, crash and burn the next several years. Nobody would buy a dumb phone. They'll buy the smartphone because you have all these capabilities, right? Internet access. You have, just it's got like so much more songs in your phone. It's like an iPad plus the phone connected, and the internet, of course, was the big thing, right? Just a big screen, and it can do so many. It can change into apps. That's what's happening here. A car is no longer just a car. And so why are we worried about margins, competition? This is a complete disruption. And it's exactly the same way. And by the way, the reason I bring up that scenario is because the market size of a vehicle is the same or even larger than the cell phone market. Like, this is bigger in terms of dollars, market value.
When I was looking to get a smartphone, I considered myself a late adopter. The iPhone had been out maybe 2 years at that point. I went to my friend, and who's always on the bleeding edge of these things, and I said, "So it's a phone that's also a Palm Pilot?" And he said, "No, it's everything." Yeah. And I said, "Okay, whatever." He goes, "No, I'll show you." And he gave me the guided tour. Yeah. And the guided tour is what you need. If someone just threw one in your hands,
they won't get it.
You'd be still using it like your old dumb phone. You'd be playing Snake instead of Angry Birds.
I love you, Ryan. Thank you so much, Ryan. That was great. Please follow him on his YouTube channel at FutureAza. Thanks, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.